Hi, this is Brandon from Galaxydoc Market. I am bringing you looking for a stock market turn. Will CPI do it? Part 2. And if you haven't seen my part 1, which was released, I don't know, maybe an hour or two before this video was recorded, I broke it up into 2 segments because it was just too darn long. But it is information packed. We are at the inflection point. And what I mean by that is that the market is either going to continue to go up higher into the summer meltdown mode on low volatility, or we will be getting a one more thrust down to take out all the unfinished business down into the areas that we talked about, which we will go over in the technical analysis. So this is a market analysis. We will focus more on the macroeconomic indicators and analysis, as well as looking at some key broad market indexes and the futures market, as well as looking at some key stocks. Okay, so this is probably what you've been waiting for. Also, I'll probably do a couple more earnings related videos throughout the week. It'll be shorter, but it'll be more focused, just simply because a lot of people have commented that they want more of that in the past, and so I'm going to do it. I'm going to deliver for you. Okay, here's the disclaimer. Read it. If you agree, please move forward. Okay, so this is part 2, and we will be talking about the technical and market macroeconomic analysis. What that means is I've gotten the CPI out of the way in part 1, looked at a bunch of the news cycles, as well as looking at the directional indicators and looking at put to call and all those other things. So if you have to watch that part 1, because it will set the tone for what I believe is going to be a critical day on Wednesday, May 15th at 8:30 a.m. when CPI numbers are released. And I do a deep dive into whether or not the Bureau of Labor Statistics is telling us the truth. And please watch that. It'll set up for this part 2 situation right now. So the question that we want to be asking is, the way I trade is I trade and analyze the market top-down approach, which means that I look at all the news cycles, see what they're really telling us, not what they're saying. Okay, there's 2 different things. They want to tell you something, but they're actually doing and saying different things. So what is the macroeconomic indicators? When we're doing technical analysis, we want to look at these, and those are what we want to focus on to gain clues as to what is happening in the market, and how we can best position ourselves, because this is a tricky market, folks. And if you kind of look at what they do, not what they say, then we have a leg up. Okay, so here we go. Okay, so some of you have commented that since I'm not cutting and pasting screenshots, and I'm actually recording the actual charts as I draw them, and I'll be doing this for a while. As our channel grows, then I will kind of water things down, basically as our membership grows, and so that these type of analysis are available to you, and more is available in our group, membership group, which is fledgling right now. But as I said, I'm starting this new channel with a different focus, more on the eye for community and education. All right, so let's start off with the first and foremost things that are important to us, okay? And that is the US dollar, and then we'll delve into the 10-year Treasury yield, okay? So the US dollar is important because it is inversely related to the market. And if you haven't noticed, intraday or during daily, or on a weekly basis even, when you see that the dollar is going down, the market seems to rally off of it. And that is because of the inflation created by all this excessive money printing that we basically exported to the rest of the world. Well, whenever that comes back to us, then the dollar goes higher because of the inflation to the United States, I mean. But if it stays overseas, it stays in Africa, if it stays in Europe, then the value of the dollar decreases because of the velocity of money, or the circulation of that money is supposedly happening. So then the US dollar decreases. Regardless, it makes things much more difficult because this is a global currency world, global economy. High dollar is negative for stock buybacks, right? It's harder to prop up the markets by the central banks. And that's exactly what's going on. And it's no known secret. I talked about that in the CPI. Everything is not what it seems. But remember this, okay? There is continuous insider selling while they're pledging to do buybacks like Apple did, 110 billion, I believe. Yet the insiders are selling. Okay, have you noticed after the earnings that they're selling off? We'll go over that in a bit. But let's talk about the US dollar. Otherwise, we'll be here forever and ever. So US dollar from a couple weeks ago has peaked at 106. Obviously, this was probably the target, but there's some measure of intervention that's occurred. So we fell and came down, and we're basically, riding this trend line higher. So this is a higher trend line. And really, we need to get back into this box for the markets to continue to have some form of a bearish thesis. I've always said we are right now running out of time on the 2020 market analog. Yes, we did sell off, but not to the magnitude that we wanted. But I've also said this stock market crash is going to be about 2 to 2.5 year long process, probably ending sometime in 2025 with fits and starts, rip your face off rallies, and then these micro sell-offs that the Federal Reserve and the central banks are going to try to prop up and mitigate by rigging the bond system as well as the credit market and printing money. Having said that, we need to kind of see what's going on. It is still bearish. Okay, we are basically on a downtrend on the RSI, but we are beginning to see some form of divergence forming, right? And that is right here. You're seeing as we're falling down, we're beginning to see RSI divergence. Now, that's just the beginning of it, but I just don't see how market is going to, the US dollar would drop below this trend line right here, okay, extending out into about the 104 level. Typically, the Fed and the central banks want to see U.S. dollar below 103, right? We really want to see it right at these levels where we bounced off. And that's going to be a tall order, but given the fact that they have the ability to print money and rig market indicators to their advantage, nothing will surprise me at this point. MACD histogram is getting more positive. Okay, it's having divergences here. We are still fully trending downward, but the MACD histogram is showing a divergence. Now, what we want to look at this point is also the CCI. Commodity Channel Index is basically trying to find support at this rising level. We need to really get back above 50 for dollars to start moving higher. The question is that with the summer coming up, and because at that point the liquidity dries up, it'll be lower volatility. It'll be a lot easier to push this dollar down to continue to create that sense that the market is going to be doing well. Okay, stochastic is on a downtrend. We are beginning right here. This is important. We're beginning to see maybe a trend change back down. Okay, so that goes inside in line with the dollar coming back down or staying and chopping at these levels. And so we need to watch those very, very carefully. Now, what is my trusted PPO ADX crush indicator, which is basically something that I came out with and with a different twist on it, but it is like clockwork. Now, when you have these type of a formation, that's bullish. Okay, so that means that I think with the MACD showing signs of divergence, that we will be probably seeing probably the next couple of weeks, maybe the dollar going higher. So keep an eye on that. Again, US dollar going down is bullish for the stock market. Going up is bearish. Intraday or otherwise, you can see market turns based on that. It'll give you an early warning system. So accumulation distribution is non-existent here, but the ATR is. Average true range still is within this lower boundaries. And as we're hitting those levels, that we're basically coming back down, right? We're coming back down. So this is completely contrarian to what you might want to see. I use ATRs very differently. This means that coming down means that the dollar has a potential to move higher. Maybe it does that with the CPI number, and that's why we did the CPI numbers first, okay? So let's go on with the 10-year Treasury. TNX is the measure of Treasury yield. Now, this is the thorn in the Federal Reserve and central bank side, right? Because The problem right now is that a high yield means that these banks are holding these worthless 10-year Treasury bonds. This is what they're holding. Technically, if they mark to market right now, every one of the banks, including JP Morgan Chase, would be insolvent. So they're just pretending it's not there. And they're trying like hell to bring this thing below into the 42.5. And below that level is when the Fed can start declaring victory on the inflation, even though CPI numbers and consumer price index, as well as job losses and just the stagflation that everybody's beginning to talk about, is rampant. I believe they're doing this on purpose, however. But here's the thing, is that we're beginning to see divergence form on the RSI, on the TNX. It's following this trend line higher right here. So, and it's right now being stopped by this green line, which is ADMA, very important for my analysis. It kind of determines the directionality. If it gets above there, then we can see it going right into this 20-day moving average, this dotted line, okay, and higher. Higher TNX is negative for the banks. And then you might say, well, but the financials and the banks are being propped up. Exactly, right? They're going to hold that up until the very end, and until they could blame it on some event, whether it is, I don't know, the war that's developing in Israel. The threat of World War III is real. I don't know if it's going to come to fruition, but that's what they're talking about, right? Rising TNX back above this level right here is a complete negative and a disaster. And that's why I have it boxed, right? And we need to first get back above 45.87. The problem is the TNX has not been able to come down further, okay? So what is our indicators telling us right now? So what we're looking at is that the MACD is beginning to curl a little bit, and there is a divergence right here, right? Everybody should see that. Pay attention to that. Rising TNX is negative for the market. That's why I believe that the CPI on Wednesday is going to be critical, and I don't know if they could lie about those numbers as much anymore. Okay, we have the CCI trying to cross above this line right here, maybe trying to target and get above here. If CCI starts going higher, guys, it will get directional, okay, to the upside. And that's not exactly what the Fed wants. When we look at the stochastics, it looks like it's bottomed. It looks like it's going to make a push higher. So that is a negative that coming into the week for the markets. They did a great job of kind of stalling out the markets, and at the inflection point, a lot of bulls and bears, got hurt this past week, unless you're playing the earnings or basically learning how to know the levels, value area highs, and all these other areas of concern to the upside and downside. If you know your levels, you would have been fine. It is a tall order. However, okay, it's a difficult market, folks. The PPO ADX indicator, which I love and is one of my theses that I use to find market direction, is trying to form these bullish cup, okay? And that is bullish for me, okay? And so I believe that the TNX is going to go higher, and I think there is something coming out. There's rumors about banks failing every single day, and I'm sick and tired of hearing about it, but that is the truth. Now, the ATR basically is still breaking out from the lower bounds, okay? So that means that we've been selling off, and if ATR starts to hit here and then starts moving higher, that is an indication. I use ATRs very differently, okay, that the trend changes afoot. Watch the TNX and the US dollars, okay, because that is going to be significant. The other thing we need to watch is the gold, right? Gold, everyone says, well, gold is basically topped and it's over, right? All it's done was consolidate its gain on a very, very massive parabolic move higher, right? And now it's beginning to break out. It broke out of this volatility box that I talked about, and it's going to retest into this area. Now, there is going to be significant resistance up here because there's a lot of unfinished sell volume auction that's present in that area. But the main thing that you need to understand is that RSI is breaking up above these old trend lines. The reason why I keep all those old trend lines because they still have meaning on your indicators and also on your chart. Okay, they can act as support and resistance and as a guide. Okay, and so if I blew this up and opened it up, there will be even more trend lines and support and resistance levels, pivot levels. I mean, the whole 9 yards. Right now. Here's the other thing that's important. MACD is ready to make a bullish cross, right? And you see that. As you know, the MACD histogram is going higher. So the gold, if gold going higher is a fear trade, gold going higher means that the economy is imploding. Gold going higher all of a sudden with the rhetoric, if you haven't seen my part one video, with the war rhetoric that's going on, they're talking about bird flu. I mean, these guys are sick in the head, but that's what they're talking about. I mean, I can't help but turn like this. I don't want to turn conspiratorial, but every time they do stuff like this, when the insiders are selling, and you know how much the insiders have sold in the last quarter, and just last week even, okay, it should give you a pause as to what you're doing before you get super bullish, saying that, oh my gosh, the fear and greed indicator turned neutral. It means we're going higher. I do believe we're going to have, just melt up higher into the summer months. And, that's another topic for another day. But over the next 2 weeks into May 28th, what is the market going to do? What are the clues? Well, gold going higher is not a positive thing for the market. It means that the insiders, and I already told you Goldman Sachs article about the fact that the central banks are underreporting their gold buying. Why would that be? Because the fiat money system is dying and they're looking to bring in another money system. And that basically means that the money system is going to die and they're going to have a narrative or some sort of an event that's going to usher in that event. Okay. So what are we looking at on stochastic? We've turned bullish and we're now ready to cross over this descending trend line. And I think we're already there. So gold is going higher. What is our PPO ADX telling us? Okay, my favorite directional indicator, right? Is that's a bullish signal. It's so simple like that. Okay, I teach this in our group, and if you are interested, hit me up. Whether as a consultation, I'm all about teaching at this point in my career, and that's what I want to do. Accumulation distribution. Look, it basically pulled back. It really didn't do anything. We have a lot of meat left on this bone. It's been kind of holding up here after it fell off after peaking. Now it's getting ready to go higher. Okay. Now I said trend change in 510. I think that's when the trend change really occurred. And so I use ATRs very differently, right? At the extreme levels, as it changes, comes back down here. That means that since the gold was trending sideways and pulled back, I think there's a next move higher coming. Not going to be tomorrow or whatever, but we have to understand that move may be imminent. Okay. For those of you that are gold bugs or gold, bulls, you know what I'm going to do in my group, right? All right. Oil. I'm bearish on oil right now, folks. All right. RSI is negative. It keeps following that trend line back down. It is basically following this trend line down and basically is negative. It needs to get out of this volatility box to enter into this new area. It's pointing down way into the 75, 76 level, okay, possibly lower. And that is because of the demand destruction. The economy is not doing well. When the economy is good, oil goes into everything. But because we have stagflation, inflation, everything costs more because we printed so much money, oil costs more. Our gasoline prices aren't going to go down. It's at like $4 a gallon right now. And if the Fed, by the way, those of you that are waiting for the Fed to cut rates, if they cut rates, we could see gasoline prices at $9 to $12 a gallon. Okay. So be careful what you wish for. So the MACD is showing some signs of divergence, which means that it's going to bounce around a little bit next week, right? It may not, but the CCI is above this level, needs to get above this area. It is technically oversold, but at the same time, it is also weak, and the gold had quite a bit of a run, and it has some macroeconomic headwinds for it to go down further. Now, however, PPO-ADX is suggesting that this coming week, we may see a little bit of a bounce if this thing can turn and start forming this formation, okay? So we got that situation underway. And then, of course, the accumulation and distribution. Okay, we have some divergence forming, but it is still negative, right? It's just selling off. But we are at the bottom end of the ATR. What do I say about ATR? I use it very differently. I don't really use it to look for ranges. I have different mechanisms to find ranges, and I've been spot on that. If you haven't seen it, watch my previous videos and previous week's videos before you give me a thumbs down. Okay, I don't know why you guys are doing that, but that's okay. But this ATR coming back down into here and then moving higher would be indicative of a trend change temporarily. Okay, so let's just keep an eye on this oil and then move forward from there. Now let's look at our broader markets. SPY, okay, SPY last week moved like molasses, very little changed, okay, but it is giving us these black candles, which is indecision and also distribution at those areas. I mean, this is kind of potentially where it could go, I guess. But the issue right now is that the RSI is kind of directional, but it's beginning to flatten out. I highly doubt that it gets above these levels, okay? It just needs a lot more oomph. And we have CPI looming, okay? Unless they rig that number, which they may, that will be the impetus. If they basically say, oh, the inflation's done, and then the market thinks that Fed's going to cut, did they cut yet? It's almost June. Did they cut yet? No. The market has priced in 3 to 5 rate cuts this year, okay? And I think Cash Carey, one of the Fed presidents, has made it abundantly clear to expect no rate cuts here. And because everything's fine, right? The job market's strong, is it? Did you look at the layoffs that are happening? All right. Those are all rigged numbers, folks, okay? So what I'm looking for is possible stalling out in this area, still tight range until Wednesday. And guys, if that number is bad, I mean, we're going to see these levels coming in really, really fast. So are there any clues on the daily that might be, or are we just still bullish on the upside? Okay. So the MACD histogram still flattening out a little bit has told us that this rally is coming, and we nailed that, right? If you don't believe me, go back to about 3 weeks ago when we're talking about it, about that turn. Okay. Now, what we have is CCI that basically is at the top end. Maybe it goes a little bit higher. It would not surprise me. However, stochastic is flattened out. It's probably going to come down, back down. And then we have basically a RSI, that not RSI, but PPO ADX that may be beginning to form one of these. This is bearish, folks. Accumulation distribution. We peaked a little bit above. Are we going to come down or move higher? I just don't see a lot higher movement. I mean, when you look at the altitude of this accumulation distribution, it's basically downward trend and possibly another leg down, maybe coming. And how do I know that the trend that prevailed over the last 3 weeks, the dead cat bounce, is ending? Here. ATR peaked, coming down. Oh, but Brandon, that's it's giving an average true range. Average true range also tells you when it turns that the predominant level of direction is also changing. So we have all of these things there. Our McClellan summation index is bullish, okay, but it's running into the end ranges of move, okay? So we got to pay attention to that. No market will not move until that changes, whether at the MACD histogram level or the signal turns down, okay? So it's got that going for it. Let's look at SPY weekly, okay? So sort of, those things are forming. Well, on the weekly, I mean, it basically broke out of its bearish channel. So weekly, the last 3 weeks, I told you, we had a dead cat bounce from this area. Okay, now we're coming into a significant areas of resistance. And so you need to pay attention to that, okay? Otherwise, you're going to get hurt. Volume is decreasing. MACD is negative, but it's beginning to form this bullish hook with the histogram. Now, this is a lagging indicator. Okay, so we got to be very careful. Are they going to lie about the CPI number and then rig it so that it looks like we're going to get another rate cut? Finally, the rate cut that everyone's looking for, or are we going to do one of these and then come right back down? And so again, you got to be very careful. Trade opportunistically. Trade the earnings. Earnings are very, very transparent right now. Okay, and especially my consumer demand destruction scenario, which we'll talk about in a bit, and I'll probably do a few more videos coming in. But the CCI is negatively trending. Okay, so that's a negative. Although we bounced a few weeks, I think it's running out of steam. Now, here's the situation though. We have our PPO ADX still. I mean, we may be forming this, but this is still down. So we could still be doing this, and that'll still be one of these, right? Negative, okay? Accumulation distribution, it's stalled out. Can't go much higher than this, okay? How can it go higher? Okay, everybody that's bought has bought. And then, at least on the weekly, what's encouraging if you're a bearer is that we're at the bottom end. We need this thing to start breaking out higher. Will give us another signal that the trend is about to change, and I think that's what's happening right here. Now let's go to QQQ. QQQ is important because we have an uptrend, we broke down the downtrend, and now we're basically flattening out at these levels. Okay, this is the daily on QQQ. Okay, these are the techs. Look at all these black candles. black candle leads to a way down. It's a sign of distribution. We have this down, longer term downtrending line. Can it pop over here and then come down? Of course it can. These boxes, pause it and watch it. I mean, these are my calculated areas of support and areas of reaction. Okay, if the CPI number is bad, I could see this QQQ coming all the way down to here, possibly finding some support bouncing around here and coming down. Okay, we are running out of time. It doesn't mean that the 2020 stock market sell-off analog is done. However, we've been bull biased. We are now looking for a turn. Okay, these are the toughest times. Waiting for those turns it takes patience. It takes trial and error, and make sure that you are not putting some crazy amount of capital positions on until we get a turn. And I think it may come this week. MACD histogram is finally diverging and flattening out. MACD still signaled, but it looks like it may want to flatten out here. CCI is losing some steam, maybe hit up to here and come back down. Again, stochastic looks like it's going to change directions for the short term. Now PPO ADX, okay, signaled bullish. And this is how we start to, one of many indicators that we use to look at market turns. And if you, again, this is what we expound upon in our membership group, and this is what I want to teach those of you that are receptive, like-minded people, right? I think we may be forming one of these shortly, which is bearish, okay? All right, and so that's our PPO ADX indicator, crush indicator. And now we have accumulation distribution. Yes, last couple of weeks we went up higher, but now we're beginning to kind of stall out off of that downtrending line. This is critical. Okay, ATR has already shown that we may be changing directions from the uptrend to the downtrend, right? If we break below here and start coming down, things are going to get wild pretty fast. Okay, so keep an eye on that. Just don't make any significant moves. Monday and Tuesday may be just another short choppy day, or unless there's some news coming out. Okay, here's QQQ on the weekly. Weekly, same thing. RSI is negative. Okay, we are basically running right into this downtrending line. Okay, and obviously if it gets above and stays above around 450 level, right above the top end of that Bollinger Band, well, I mean, I guess we're going to go higher because everything's awesome. But these are the levels that we can reasonably expect in the next couple days after into the CCI number. If CCI number is as bad as I think it's going to be, we're looking at these levels. These numbers will come up fast, and this is probably the magnetic line that it's going to be following. The other thing on weekly is that, I think this rally is dying because the volume has died, right? It was like molasses last week, okay? However, because of that rally, we have the MACD showing maybe a bullish hook, but we're flattening out here. We're still in a negative position. CCI is in a negative position, okay? So is it a dead cat bounce? Is that almost over? Are we going to get one last push down before the summer rally happens, which I'm totally looking for, okay? And I don't know. It's basically playing out, continue to play out this bearish PPO ADX. It might be forming a little bit here, but there's no definitive signal on the ADX side. On the accumulation distribution, there's been accumulation in a downtrending line. It's stalling out, right? And then we're kind of near the end range of this ATR level. So if it starts to turn back up, guess what? This uptrend is over. It's going to come back down. That's the way I see it. Okay, now let's go and look at some Apple, right? Apple reported good earnings. Oh, well, no, not good earnings. It was like less than worse expected earnings, if that makes any sense to you. It was bad, but it wasn't as bad as they thought. Having said that, so Apple has rocketed higher after the earnings, and then basically it's forming this little descending type of a triangle, right? All right, or a flag pattern. Okay, it's either going to break higher and then start testing this 187, or come down and fill the gap. And I think again it's CPI dependent. Okay, now we have some put positions on these, and basically what we want to be doing is being very careful. Not a big huge position size, but Apple is not doing well, folks. Okay, nobody's doing well. No one is buying these. This falls into consumer discretionary sector. If you haven't seen that sector analysis, you need to go watch it. CCI is telling you that there's weakness. MACD is ready to cross over negative. This is the daily. And then stochastic is ready to make a death hook. And then we got PPO ADX. Guys, pay attention to this. It's beginning to form this negative. We just need this to turn over. So we form this type of an action. Accumulation? What accumulation? Insiders are selling, folks. They're selling the crap out of this, okay? When it popped, Tim Cook was selling to you. If you're buying Apple right now, Apple's not a good deal right now. But like I said, after May, we may have some play here. But however, we peaked right here after the earnings, and we're coming back down. That means that there is a possibility, and I think it's again CPI dependent. And I think I can't see how CPI is going to be good unless they rig the numbers. Okay, let's look at the weekly. On the Apple, on the weekly, we broke through this trend line, but we're still in a downward trend line, right? Okay, so we had this big move up after earnings, and then last week we're just trading in a very choppy range, finding resistance right off of here. Now, if it gets above this red box, yeah, it's going to move higher, obviously. Anything's possible. Apple is the big component of the market. It just didn't do much, so S&P 500 didn't do much. Okay, we have MACD that's crossed over on the weekly thanks to the earnings. Are we going to do, now the MACD histogram is going to be key. If it starts growing this, okay, then we know the market rally is near because Apple is a big component of the market. However, CCI broke out. However, the CCI now from this longer term trend line, are we going to get over here? And obviously we broke down on the stochastic higher. So are we going to move down lower after going a little bit higher? Okay. Everything's up in the air. Okay. It's all CCI dependent. The main thing right now is what is happening with this PPO ADX. I mean, we may be doing one of these, okay, or this. But right now, the predominant thing is we had the bull bearish and then another bearish formation, right? Right here. So we had these and then this, okay? All bearish, okay? But if we form these cup, that's bullish, folks. And I think it is. It's going to, I think there's a little more pullback left, and then we're going to have a summer rally. Okay, that's what I think. Accumulation distribution, it's been coming down, and we just broke above that downtrend line. Let's see where it goes. Realistically, nothing really is going to happen until on the weekly we break down. That's at least a couple weeks away, right? And then an ATR, we're breaking down from the bottom end. It's been super bullish, and now, are we going to come back down into here? So that deserves looking into. Airbnb. Those of you that followed my analysis last week, you made a lot of money. This is, pretty clear. You had these two bearish double top formation and a downtrending line. I still think there's probably a little bit more meat on this bone over the next couple of weeks. Let it bounce. Any type of attempt at bounce is below 150 is an entry. I think this is really the target down here, right? Into the 138 level, okay? You just don't want to, if the market's going to go on a rip your face off rally into the summer, then, this will be a good point to be buying bullish thing. Right now, based on CPI and the consumer demand destruction, I think it's going lower. Okay, everything is going lower. Now, there may be a little bit of a bounce. Like I said, do not get into this until you see some bounce, because CCI has to recover a little bit and come back down. It is at a extreme level, and then CCI at extreme level is usually bullish, at least for a few days. Okay, so basically we have another PPO ADX that's looking like it's going to form one of these guys, okay? And so it's been bearish. I think we have accumulation distribution going south and lower, and so I think that's going to be the case. And then, of course, we have the ATR. We basically kind of broke out higher, and I believe it's higher ATR doesn't mean it's bullish, guys. It just means that there's an expansion of the prevailing direction, and then from here, as it turns over from this extended level down, because that's what happens. Prices contract and expand at areas of inflection. That's all that means, folks. Okay. Now, let's look at Airbnb really quickly on weekly, because I've been talking for 34 minutes straight, and I just think that there's going to be at least down to this trend line into the 440 level. But there could be a bounce into the 150 if it stalls. giddy up all the way down, right? It can go back down lower, but we are running out of time on this thesis, okay? So still more meat on the bone, but you got to wait for a bounce. MACD is negative on the weekly, so there's probably more directionality coming, a lot more. The PPO ADX is fully negative, meaning that it's bearish, okay? Accumulation distribution, look at that. They're selling off after hitting those areas, and we're at the bottom end. So now we're turning up. So that means there's more meat on this bone. Just wait. Just don't, after watching this video and you go gangbusters in because you missed it on Friday or Thursday or when we called it to front run that earnings, there's still time, but you got to wait for a bounce, folks. All right. Affirm. Another demand destruction, right, play. And Affirm is now fully directional to the negative. We talked about the ascending megaphone, okay? We're at this trend line. Any bounce back up into the 34 and a failure, okay, that's coinciding with a 50-day moving average, will go lower. There's a lot more room to go down lower on this one, folks, okay? That's all I'm going to say about that, okay? Do your own research. Amazon. Okay, so Amazon has reported good earnings, apparently, and it's stalling out. RSI is stalling out right over here. Okay, we're stalling here. We're basically running into this volatility box, overhead resistance, and we're down here finding support off of this long-term trend line. If we bounce and then come back down after CPI, we're going to target this area, possibly get into this region right here, 177.03. And I'm not even sure if that's actually going to bounce, hold. I think it's going to back test into this 100-day moving average, and that may be an area or into this volatility box for you to look for a long position going into the summer, right? It all depends on that CPI again, okay? Amazon Weekly, same thing, negative, okay? We peaked above this line and then we failed, okay? That's a very bearish sign, right? Can it go higher? Of course, but the Bollinger, it's going to be hard to continue to go higher from all-time highs when consumer demand destruction is happening, okay? So likelihood is this week we may see it coming back into this area, maybe dipping below in the next couple of weeks, okay? Like I said, this rally has legs until about May 28th to June 5th, but June 5th is pushing it. All right, so MACD is, histogram is flat and to negative. It's at the top end of its range and it's stalling down. You can see that stall, right? If you don't see it, here, I'll do it for you. Stalling, okay? Really stalling, right? We have the CCI kind of poked over. Can it go higher and then come down? Yes. Short all rips in this point, okay? Now, the only thing that could save this market is rigged CPI numbers, and I fully expect them to try. We'll see if the consumers buy it. PPO ADX is fully bearish on the weekly. Accumulation distribution, yes, it may be topping out here, but there's been accumulation, but a sell-off, right? So it's like the hedge funds or the mutual funds are buying, but the insiders are selling. People like Jeff Bezos, right? ATR, bottom end of the range. It means that the top end trend may be changing. If it starts moving higher, right? If we start moving higher up here into this area, that is basically indicative of further price dislocation that is coming. Okay, so pay attention to it. There's a lot of meat left on this bone. While we're on the subject of demand destruction, holy cow, I got over ambitious. I'm glad I broke this up. Is that the other one, just like Roblox, just like Disney, okay, and subscription base, here's the top end. If it pops into here and fails, this is a short all day long, folks. We're beginning to see some dislocation, and if CCI is bad, yeah, I think Netflix offers a very intriguing option, and I may do another video in more in depth, but MACD is still bullish, but it looks like it's petering out. CCI looks like it's petering out. Stochastic definitely looks like it's going to change directions. And on top of that, we have actually PPO-ADX forming a bearish formation. Accumulation distribution is now diverging significantly. And then let me get rid of that. And then ATR, okay? More room to go down, okay? It's not, I would have liked it up here and then coming down, but we're forming a divergence. It's going to keep coming down. That'll continue to show that this market, this Netflix is basically that bearish engulfing that it basically did, and it failed off of trying to get above that breakdown high candle, coming down at least down into the ADMA. This green line is going to be a tell. If we get below there, yeah, I think this offers a very attractive shorting opportunity for those of you that are inclined. Really quickly, NVIDIA, I haven't talked about it in a while. Semis have been fairly strong, except NVIDIA is beginning to put in signs of stalling at this point, right? Volume is depleting. We're getting near that ADMA. We're kind of bouncing around, but it looks like it's, again, this AI mania maybe coming to an end for now. I don't think it's over now, but the MACD histogram is showing such. CCI is showing the same thing. Okay, stochastic has already rolled over and crossed below that uptrending line. And then we have this bearish, again, bearish PPO ADX, right? Okay, there we go, right here. Okay, I think ATR is signaling incoming trend change. Okay, we're going to continue to go down lower, right? And that's, so keep an eye on NVIDIA. Okay, I know it's a little scary because, you know, they tend to be super bullish, but I think that's coming. Really quickly, I'm going to talk about BABA, and then I'm going to cut it short here because, and then Home Depot, those will have to be another video. Okay, I can't get to it. It's too long. It's 40 minutes. This is insane. But BABA is reporting earnings next week. I'm a little torn. I mean, there is divergences forming on this way up, okay? And the black candles and all these doji candles are showing signs of distribution at the top, okay? And volume is depleting. MACD is coming down. Everything looks kosher, right? It looks like where you have the PPO ADX forming that accumulation distribution wise, it has been accumulating and now it looks like it's stalling. And then we're basically at, you know, kind of that midpoint. So I'm not quite sure how powerful this is going to be, but that is something that we need to take a look at. BABA really quickly on the weekly. I think on the weekly part, it's a little bit misleading because yes, there is divergence right here, but you know, we really haven't back tested into this area. And if you look carefully, and I don't think it's real, but I mean, we have some inverse head and shoulders that basically broke down into the midline. So this is you know, an area where if they report, you know, China likes to rig numbers, right? So it's something that could give you high reward. But you know, on the weekly, it looks like it's basically towards the end, except the PPO ADX. If it forms this formation, that's negative. I mean, basically everyone that sold could have sold, and maybe they'll sell even more. And we're at the bottom end of this range, which means there may be a change from the bottom to higher. Okay, so I'll do a little more deep dive onto that one. Home Depot, another demand destruction play, is at the bottom end of the range. RSI is negative. I'll do a more in-depth analysis on this. CCI is negative. You know, basically PPO ADX is forming a bearish pattern. And then, of course, they've been selling the crap out of this, and we're at the midpoint on the ATR. So there may be some meat on this bone. On the weekly, yeah, it's peaked, got into this volatility zone, and came back up. Could it bounce after earnings? It probably may. It probably may. It depends on if the consumers are tapped out. But all signs and symptoms point to a potential bounce that may be able to be shorted. We'll see. Okay, this is kind of at the bottom end of the range. Now, if they fail, I mean, this is kind of going to come right down into that 300 range. Okay, so I think for me, that should be it. I just want to leave you with, you know, part one video, we talked about consumer demand destruction. So Home Depot, BABA, those kind of things are probably going to be at the top end of the range. Earnings are winding down, but there's still some great companies, okay? Especially, we talked a little bit about Home Depot. I may do a deeper dive into this, but Home Depot, we got BABA, right? I mean, shit. You know, we've got some interesting earnings. Monday.com, these are software companies. Cisco, okay, you saw that these are weak, okay, sectors. All right, so I mean, there's some interesting ones. Baidu, JD, John Deere, more consumer destruction. Software destruction. Under Armour, who's buying Under Armour these days? I don't know. I'm not. Okay, so you know, just yes, we are winding down, but it's something that you know, bears attention. There's still a lot of opportunity. So I said, like I said, CPI will be key for the market direction, but does anyone really believe U.S. Bureau of Labor statistics? You got milk? If you don't know what that means, watch the part one. CPI expectations of 0.3? Nah, not really. Okay. I think the markets and the stocks, as I've shown you, are showing potential signs of a pullback this week and extending into the end of May. So sell in May come a little late. Okay. And but like I said, it's been a very tight, difficult market to trade unless you're trading earnings. Okay, so thank you so much for watching. Like us, share us, please. Above all, give us thumbs up. Thank you, and let's get some alpha. Subscribe if you want to find out more about our group. I know some of you have reached out into the commentaries about our membership and everything. I like to talk to you first. Okay, so message me at this email address or just DM me. Okay, also. Let's do this, man. It's going to be an interesting week next week.